Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for October 7th, 2020. We're going to go a little quicker than normal on this one today. All right, let's start with the market health check. Okay, so yesterday we had the surprise tweet from the idiot in chief. Crushed the market real quick down to the edge of the dragon. But the overnight market settled down. It gapped up and then had a fairly strong finish on a 1 ATR move that closed near the top of the range. And we're back up near that 10-day high again. So the market shook off the news. Maybe it was just a steroid rage. Let's see what else we got. So we got a 10-day high here, bouncing off a 10-day and 30-day low here. All we've got to do is break through this 10-day high, and really there's no more resistance till Z1 and the Dragon Peak. So, 350 and 346 are both in play. On the downside, we got the Bollinger Band mean in the low of the day as support, the skin, spine, and lower skin of the dragon. The RL30 slope got positive again. The PSAR for tomorrow is going to be at 327. So we've got a nice buffer of support in here. And today had fairly broad-based strength. So this was a promising rebound from yesterday's sell-off. The sectors that worked today. The S&P was up 1.6. The Dow was stronger at 1.8. The Russell was even stronger at 2.2. And Treasuries gave back yesterday's gains. They're back down under 160, and they were off 0.75. The sectors that worked today, silver was slightly better than the market at 1.75. Tech at 1.8. Then you had the healthcare and Mexico at 1.9 and 2.1 respectively. You had consumer discretionary 2.4, basic materials 2.5, oil exploration 2.8, clean energy crushed it again today at 6%. The triple techs were up over 5%. The big gainer on the day was almost 10% here out of U.S. Steel. And you also had Cliff Natural Resources at 5.8, Alcoa at 4.8. So there was real strength in XLB series and all the metals. On the downside, things that underperformed the markets. The market was 1.6. You had Simon Property, Finance, and Energy sectors at 1.4. Emerging markets 1.1. Wheaton 1%. Japan 0.4. Brazil and oil were basically flat, and then treasuries again at minus 0.74. So it was a pretty broad-based gains today, and not really the tech sector. It was more the energy and metals leading the way, along with discretionary. So that was comforting. You had a nice bounce in Tesla at 2.8. So that's all pretty good. Some trades I want to highlight. The first thing I want to say, I put this in the in Patreon and also in Campfire. This is really important. So this is Jerome Gonzalez from the Philippines, and he came to a live workshop in 2014. Got exposed to the Risk Z. He recently, last year, retook the swing and day trading courses and signed up for Patreon. And this is what he said today. His quarterly check-in, I suppose I should say. Some things I want to highlight. It's been a year since he took the home study courses. The Patreon service is the best investment he's ever made and allowed him to reconnect to our emerging principles. He's found his sweet spot in swing trading growth stocks on basically 65-minute charts. So he's dialed down into that 65-minute period that gives him 6 equal periods, and then uses MACD 4 seasons to time his entries and exits. One strategy tweak that he's made is using a form of the hybrid frog, but he's anchoring it to key psychological levels or moving averages, and that's essentially identifying critical states and then breakouts from critical states. Another is buying on the bounce off of the 65-day EMA. And so the hybrid frog technique and those key support levels, support and resistance, are giving him real success. If the initial hybrid frog trade is a success, then that gives you money in the bank, which can carry the entire day, and then turn that into a position size for a swing trade. So he's using the form of core and turbo, and that's enabled him, for example, in Tesla, to find these entries here at the bottom of that channel and the bottom of this channel, and then in some cases he's using the hybrid frog anchored to the open on an earnings gap day, like here's TWLO, and then if you just ease into it using the hybrid frog, off it just goes and just keeps going. So it's that moving out from a critical state when it breaks beyond the Z3. Another key takeaway for him is the use of the risk Z, which goes back to the research weekend that he attended in 2014 when Tim Clark presented the swing performance results and showed how that if you timed that or aligned it with the risk Z and the seasonality, that is really going to help you find those sweet spots in the swing trade. And Jerome's using that too. So now he's using risk Z to identify when to start buying the lead growth stocks, which usually start to emerge before the market indices turn up. So strength comes early, often, and then persists. And then at the same time, when the risk Z gets overbought into the fall, then it's time to stop entering new positions and then just manage exits. The result is that his equity barely declined during the COVID bear market, which you notice down in here, and it was flat when the market corrected 11%. So his equity curve as a professional trader is a lot smoother in past years, with a max drawdown of just 7.5% in 2020 from the peak, and below are his results. So his year-to-date return is 91.5%. The 1 year rolling is 95.5%. 3 years, the compounded annual is 23.8%, and the 5 year compounded annual is 16%. And then you can see how that compares pretty nicely with the broad market indexes. So that's his quarterly check-in. All systems go from Jerome. So I just think that's important to share. This is a guy that's doing the work, applying the principles, tailoring it to his psychology and time frame and his targets, and leveraging his strengths. So well done. Here are some trades for me today. Here is U.S. Steel. This one was based on strength in the sector, the XLB sector. So we started the day with a hybrid frog breakout with the PSAR stop, made the one execution R after the give back. It gave a higher low. So this is the supported spring crossing that locked in 2. Got bottom ticked again. It crossed the dragon again. So just re-enter with a tight stop. And this is 1, 2, 3, 4. 4 execution R using the Wu Wei exit in the normal way. This was a place where I thought about adding a second position, but I had other things going on. So cashed in the usual way with the managerial exit, and then rebought the supported spring crossing again, and that one paid off really well. This closed above 860, so this one just kept on going and never really looked back. It was up almost 10%. It was the single biggest winner in our stack today. This one is Cleveland Cliffs. So the material sector was also working. This was a low a higher low. So there's the supported spring crossing. I thought about the sniper exit. I waited for the manager and just took that. Re-entered on a supported summer crossing. Took the standard Wu Wei exit. I thought about getting short here, but I didn't want to get short one of the two strongest stocks in the strongest sector. So I just waited for the winter. It found support at the VWAP, bought the supported spring crossing. I thought about adding a position. I thought about the sniper. I just took the Wu Wei exit just because I was in that kind of mood, and that one returned 1, 2, 3. So that's about 8 execution R in CLF. Next one up is Clean Energy. Just trading this thing with Turbo. Here is the here's our standard hybrid frog entry, and this is a supported summer crossing. I thought about adding. I did add when it broke above the Z3, and then cashed with a sniper up here for 1, 2, 3, 4. That's about 4R. This one was a supported summer crossing, standard Wu Wei exit. Took the manager's exit for about 1.5R. This one is U.S. still later in the afternoon. So we saw the early move. The morning move took us up to here. And this is where we got a managerial exit. I didn't play it on the downside, but in retrospect, there was a collapsing dragon here that was playable. But that just set up a really harsh winter, supported spring crossing, cashed a fraction, re-entered, scratched, re-entered, cashed 2, re-entered, scratched, re-entered, added, and cashed using a sniper exit. So this added another 3 or 4. So it was tradable, but it was a little choppier in the afternoon. But I stayed with it because that was the big winner all day. So that was that. I've been studying the dividend payers in the S&P 500. There's some ones to add to our interest list here. And these are all in that material sector. So you got Iron Mountain, Valero Energy, Kinder Morgan. You'll notice Simon Property Group, which is our proxy for commercial real estate, is paying 7.5. So my spider sense is that these dividend payers are going to be more and more important because bond yields are just going to zero. So that you got to play income somewhere. And these are all. Valero Energy is very much like Devon Energy in the sense it's that mid-cap U.S. energy guy. So we're going to, and I've traded this one before. So that's going to get added to the stack as a partner with Devon Energy. My brother reminded me that we had been playing Proctor and Gamble long term. This is a daily chart on Proctor. So I just want you to notice how quietly Proctor, which has increased its dividend payout every year for 36 years. This was the peak before the big massive sell-off back in late March. That thing recovered, pulled back. We bought the supported spring crossing, got the second entry in our long-term portfolio when it broke above the Z3. And that thing has just done nothing but crush and was pretty much immune to the sell-off here recently and is pushing to all-time highs. So Procter and Gamble, pretty solid company, consumer staples, and pays a nice dividend. So PG getting added back into the stack. Notice that the Z3s are just starting to expand. So upside is certainly possible. Let's see here. I want to open the let's take a quick look at the daily now. I thought I had opened that one. I guess not. Okie doke. We are still in bullish normal. Shapes. Okay, so bullish normal still. Back into overbought conditions. Risk Z is favoring sharp moves in either direction. ATR percentage still below 2%. No signals in channeling an overreaction. The non-techs are looking pretty good in the min pain. So you got Nike, Salesforce, Amgen, Honeywell, and Coke. Halliburton, Devon, ExxonMobil, Schlumberger. So the energy sector is still suffering. And Apple, Walmart, Disney, and Merck in the max pain. So there's some opportunities in there. Lots of dojis today. It was surprising. I was expecting bigger moves, but we didn't really see it. Boeing at 2.3 to 1. Merck sold off today and is at 3.5 to 1 on the auto framer. Had a breakout in Honeywell at 101. Let's see. And then also breakout in Travelers and in United Health. So there's some things to choose from there. Only 3 dojis today in the ETFs. 2.7 to 1 in gold on the auto framer, 3.4 on treasuries. There was some breakouts in the globals, with maybe a shift away from the U.S., and then also in healthcare, which contributed to that strength in United Health. Only 3 symbols testing out on the auto framer at better than 2 to 1. That's Merck, treasuries, gold. Let's add Walmart in there because that's exactly 2 to 1. Here's that Proctor, 5 ATRs above its long-term fair value and still going. So I think you add these to your watch list about the relative strength leaders. That's McDonald's, Nike, Procter, and DuPont. All in pretty good shape. Daily squeezes, because today was kind of a doji day. Apple, Walmart, Tech, Microsoft, even the S&P itself is at 2.4 to 1. So I'm expecting a big sharp move tomorrow because of the failure to fail today and the recovery action that we saw. I think you could play it with these tech leaders, but you might also keep your eye on IWR, the real estate. Spring is still dominating in the Four Seasons. Nothing. And again, you just notice how good Proctor just starting to stand out to me all over the place. The breakouts today in the Dow, Honeywell, Travelers, 3M, United Health, pretty nice, and then Mexico, healthcare, emerging markets, and EPP. So it just looks like there's a shift away from the U.S. towards maybe some of these broader internationals right now. Today was a nice recovery. That's almost like a universal entry to the upside, and it could push very nicely up here to around 350. A nice turning point in the slope of the RL30, and seems like it held support in the percent stretch. So this feels like an orderly move, much like this one was a correction followed by a nice gain. Maybe there's some room in here for that. I'm cautious, though, because of how close the election is, but at the current rate, Trump has taken himself completely out of this election, and so maybe the market likes the certainty of a clear winner in the Walking Dead Biden. Okay, so that's everything I wanted to cover tonight. I want to get this published and posted, and I got to hustle to another meeting here. So that's everything I got for you. We will see you in the chat room, guys. Take good care. Let's crush it tomorrow. I'm feeling the market is up.